All right, all you devils, how's it going? Here we are on Thursday. Oh shit, what is it? The 6th? Thursday the 6th. So as I noted in the comments, you guys were giving me the choice of picking an FX pair, but it was right behind the US dollar CAD. So I said, so that we can get more assets covered, I figured I'd just combine the two. I absolutely love trading the CAD. It's not unlike every other currency pair. It's totally, completely dominated by this algorithm. Now, we've been through this a couple of times, but it's breathtaking, if you will, in the CAD. If you haven't seen it, it literally blow your mind, right? I mean, it should and it shouldn't, right? So anyone who's been a member here, right? I mean, you know, I will tell you, this is the DNA of the market at every degree, from the 1 minute to the 1 week to the 1 month. There is no place where you will not find this algorithm in play. But it's really striking here. So I won't dwell too much on it. Right? I could probably give you. We got a daily chart going back to 2011. I at least 200 measured moves in here, at least. Right, if we took it down to smaller time frames. But let's just focus on the big ones, because as I also try and tell you guys and encourage you guys, FX is very hard to trade because it's so hard to get into a trend and sustain it, which is why I tell you really want to be 4 hours and above. Because always the risk, always is when you first go into the market. So there's two things that come from that. One, you have to keep the size small on entry, because it's very hard. See, it looks here and you look at it and you go, well, what's so hard, man? All right, so I buy the 50. No, what's the big deal? It's all of the finagling that'll go on around that pivot, right? They're going to do, market makers are going to do everything they can to try and squeeze you out of that trade. So now it looks easy out here on the daily, right? So but what I mean by that is you've got to give the market plenty of room to your stop when you're first going into the market. You got to let it get some distance from your entry. And then if you're going to build a position, you want to build it on retracements, not to try and go heavy on the first bite. You got to ladder in. Or well, let me give you an example here, right? So here's what will happen. So do you see here now? Again, I know. So we're going back in time, but I can make the point here for you as well. Do you see? So we go straight down, right? So you're thinking, okay, well, straight fucking line. What's the big deal? Well, look what happens right here when we get to the 50. Do you see that double top? Right. This is what you have to be most aware of in FX is all the double top. Look, double top, double top, double top, double top, or it'll look like this, right? So FX traders will call it an M, right, or a W, right? So you'll catch it on one side or the other. It'll look like this, right? It could be a double bottom, but it'll be something like that, right? It'll be an M or a W. So now, what would be worthwhile for you to do for my FX traders? You got to go through and look for those, right? So here's a perfect one, right? So do you see the M that it creates? Then it comes down here, creates a W, right? M. Now, right, so sometimes you'll see it'll be distorted. Well, shit, didn't want to get that yet. Hang on. It'll be distorted like that, or it'll look like this, right, on the other side, right? Or you might have something, often you'll see that, right, where there'll be one peak. But essentially, what's happening here is the stops are getting run, right? So they're luring you in, and then they rip it the other direction. Same thing here, right? So look here, right? So you're in, you're like, oh, hey, man, my trade. Let me zoom in there a little bit. You're thinking, oh, hey, my trade's off to a good start. What right there, right? W, M, well, pardon me, W, W, M, 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 W, W, M. M, all right. If you hit this on a smaller time frame, promise you that's a W. Same thing here. Very hard to get into the market because you get in as soon as you get in. If you get off to a good start, right? So what's your temptation there? The market starts moving away, right? The first thing you do is, oh fuck, oh look, I got a good one, right? So you're going to move it to break even. Now what's going to happen right there, right? Right? They're going to stop. They're going to come back and take that stop out, right? Because they know where you entered. Right, market makers are their purpose, right, is to empty your pockets, right? So you got to be aware of this. You just got to watch for it, because that's where the risk is when you first go into the market. So thus, right, it kind of is reinforcing other things that I'm always trying to tell you is size should be small, right? You have to give it more room. Now, if it starts to go your direction, right, now you got to wait for a retrace. You got to wait for a little pullback, right? So if you caught the turn here, you got to wait for this to come down and then come back here. But what are you expecting there? You're expecting another M, right? So if you're going to add, you have the same phenomenon on every add, right? It's so rampant in FX, right? It's if you don't know it, you're destined to get blown out, right? They're just going to pick your pockets, right? So you have to really, really watch for that. Okay, now I got kind of sidetracked there. We're trying to get into the market here. So looking bigger picture. Okay, so we'll look at a couple things, then we'll break down the subdivision. So swing high, swing low, we come right to a 50. Now note here, as we come back, well, here, we'll do it this way. So as we come here, we go golden zone, then we get denied the target here because of that 50, right? So this algorithm, now could it be a front run? Yeah, it's possible, right? But look here, so we come back. Now we get through, what do we do up here? Another double top, right? Double top, right? And then look at the push off of that. So what's interesting about this is now it's changed the count, because it was reasonable to think, I'll come back here, we had a diagonal. Now purists are going to bicker with me about this, because we have it's a leading diagonal, but 5 is not longer than 3, right? 3 longer than 1, 5 not longer than 3. I am not such a purist that I'm not going to call that a diagonal, right? As far as I'm concerned, that's a diagonal all day long. Feel free to differ with me, but if you were trading that as a 1-2, well, okay, so if you're trading that as a 1-2, right, you got a little bit of a front run here, so it could be, right, you might have to be down at a smaller time frame. It's not quite to the 38, pardon me, it's beyond the 38. So here, if I, let's put this one. So we're beyond the 38, but this nice trend line catches it, so it's hard to call that, right? It's hard to say that. So out here on a daily, that's bigger jump than you think. That's a bigger spread than you think. So front run could be, right? It could be this structure coming in here. It's hard to say, right? You're never really going to know. Could be that pivot, this prior resistance is support. Now, of course, the reaction likely could have been some news driven on that as well. So I know this is getting crowded here, so let's just focus here. So now that we've come all the way down here to this 50, and so look what happens, right? First, right? So from here, what do? Right to the golden zone. Right now, it can't, right? This would have had the target down here. Right? Do you see the green line here? It can't get there, right? So it gets denied. Now it breaks. So we look and you say, oh, where's that going? Well, you might do a couple of things here. You might say, okay, well, if that's going to end up being an A, right, when we thought it was possibly a B, well, here's your measured move. Gets through, right, just enough. What's it doing right there? It's going up there just to tag, whatever they can find up there, whether it be stops or breakout traders trying to jump the breakout, because it doesn't quite get there to the tick, right? But look at the reaction, right, coming off of that. It's just astonishing. Okay, so amazing myself here with my own commentary. Okay, now from the swing here, I'm just connecting, right? It's just getting as close as I can. I got a little wick here, but I'm just trying to get connected here. Then I'm coming up to this pivot right here. Now, all right, so we have throw over here, so I'll recreate it. So I have this throw over here, right, that went up here to challenge that pivot. So all I'm doing here is just saying, well, let's see if I clone it and just drag it up by 50. Since I can't, just like I can with median lines, I can't just add the 50. Well, I just do it, I just recreate the same thing as though it were a set of median lines and you're just adding the 150. Well, I'm just doing the same thing here with the channel, and we come up, right, so nice. So the geometry plays, right, so that's what you want to see, right? So how do I look with regards to the geometry? So I get a double top, I've got a swing here into this channel, and it's a straight line. Now look what we do, straight line down to the lower channel. So I know what you're thinking, right? So you're looking at that going, wonder if that's technical. We get right on it. Well, surprisingly, we're through the 50. So the first stop here is at the 50. You get a little reaction. Now, what does that look like there? Right? So let me get this down here. Now this is maybe a bit far for it, right? But that would be your W, right? So there's your W. So are we done here? Well, you can make a case. And we're not quite to the channel here, but it looks like there's 5 that's come down here. So if I'm looking at this going, okay, where are we going next? Right? Let's get that here. Let's go green here. We haven't done that. All right. So we come down here. So possibly, well, okay. So you say I've got a possible 5 here. Well, let's just see how technical are we, right? If I'm just standard ops, right? 2 to the 3. What? 38. First algo target, okay, that's a start. How about length of the 1 projected from the 4? 100 to the tick. Right? I mean, so you look at the nice. You just, maybe it's just me, but it still takes my breath away every time I do. What have I done? 1,200 videos. Every time I do one of these, right? It's just so mind blowing, right? Right into the box. Right, that's 100 to the tick. So you go, okay, well, I got a contender here. Maybe I'm done. Maybe. Right, so do you want to try and buy the turn there, try and pick the low? Well, not so fast, because what's coming tomorrow, right? So we know we've got major impact tomorrow. You got both the Canadian and US dollar. Right? Remember I said you don't even think about getting into an FX trade without checking the calendar. Don't even, first thing you do. CAD dollar, right? Do you want to put on a trade going into that? I wouldn't. Now, we can anticipate volatility coming out of that. But if I wanted to play the potential increase in volatility and be non-directional, right? Well, I might go to the options market. But then maybe you buy a straddle. So you'd go to the Canadian dollar futures contract where you could trade the options of the CAD to the dollar. Now that would be a longer video here, but I mean that's the kind of play you might see. You can buy a straddle or a strangle, something looking where you're looking for, you're not really directional, you're just looking for a spike in volatility, right? So I think we can all anticipate high volatility tomorrow. So going into that, we certainly wouldn't want to be an option seller, because as volatility increases, that inflates the prices of options. So you wouldn't want to be naked. You wouldn't need a naked spread. I don't know that I'd want to be terribly directional. I might want to be biased a little bit to the long side per the count. Right, but that's just, we're going to go there, right, with enough interest in the options market, which I think we're starting to see. So looking at this, let me pull back out, because I'm 12 minutes in. I haven't even gotten to any of the real points I was trying to make here. So what I see here, it looks to me like we've got a WXY going in, right? That, from the Elliott perspective, I mean, I don't think we have to argue about that ABC, right? And the 5 down, it's just gorgeous, right? It looks a lot like this 5 down, although the 2's a little stalls here a little bit more, but just ripping down right to that 50, right? So there's your W. Well, while this had the potential, it looked like maybe we were going to go 1, 2, 3, 4, right? Well, this blows that up, so likely an ABC into a double top for the X. So coming down here, right, this is pretty rudimentary Elliott, right? It looks like we've got the A going in here. So the next trade, I'd be looking for the long side, but ultimately for the short side. So I would not try and pick the turn here going into those 2 employment reports for tomorrow. I would let that pass you by. Maybe at the end of the day you have some clarity as where this is going, but all I would be looking for is, well, here, let's just tee it up, right? So, well, here, let's do it this way, right? Since we don't know for sure that we have the pivot here, get you down a touch. That's the bank shot I'd be after right there. And you might do it this way. If this is going to be A, B, well, here's 100. But if it's not, well, let's see if I can straighten that out. If it's not going to be 100, next target would be the 127, 138 window, which is right here at the 50. Oh, and then, right, if depending on where we go here when I get that pivot, maybe we're doing it like that. You get my drift here, right? So we'd head down here. We'd have the median line as a target. Now, of course, I don't have this, right? And I don't have this. But I'm just kind of laying out in terms of the trade structure that I'd be planning for. Now, of course, this could all change tomorrow based on how the market responds. Right? What's the dollar going to do? What's the dollar going to do? High probability that stimulus package gets announced tomorrow. right? So which means either $1 or $3 trillion getting print. Well, you know, we call it printing, right? But how about we say it this way: a couple of $1 trillion, either $1 or $3 trillion out of thin air, right? What's that going to do to the dollar? Well, right, so your first thought is, oh man, dollar's going to crater, right? They make $3 trillion more out of thin air, dollar's going straight down. Well, not so fast. So as in the same breath as don't even think about trading an FX pair without checking the calendar, I would encourage you to look at the relationship of the spread. So now that we've done this, shit, this is going to be a long one. All right, I'm already at 15 minutes. Okay, let me get this out here, right? So you always want to start with this on the daily. All right, remember, FX is for, in my view, right? So to my members here, I would, again, having traded FX for a long time, if you're down trading FX on the 15-minute, it's not a matter of when you blow up. It's just a matter, or if, it's just a matter of when. You got to trade FX on the long time frame, partly because these trends sustain for a long time. So the hardest part about trading FX is, one, getting into the market, and then two, keeping your fucking hands off the mouse, because these trades can go for years. Right? It's brutal, right? You almost have to think of it, if you can get a turn at one of these levels, you have to think of it as something like Bitcoin, where it's like, oh fuck, well, I'm not selling that Bitcoin. I mean, that's how I think, right? But you try and think longer term, right? So then the challenge becomes, because if you get up substantially, it's going to be an overwhelming desire to want to take profit, right? But just, you know, that's where the Elliott can be helpful. Follow the count. Okay, so here's the point I'm trying to make to you. So I've got the 8 majors on here, but take a look at where the dollar is. All right, so here's the dollar, here's the CAD, this magenta. So there, you know, we have a spread here, but we don't have the extremes that we want to look for. So for example, here's the Aussie dollar. Now we had been looking at this, you know, on a couple of FX pairs back, when we got way down here, then got way up here. Now it's drifting lower here. But what I want you to see is, when we get to the 50s, plus 50, minus 50 here, they don't stay there. Don't stay there. Now here's an extreme where here's the Swiss got really, I mean, 71. All right, now didn't make the full loop. Now heading back up, right? So the Swiss, it's a different topic, right? Because for the most part, it's backed by gold, so more so than the others. So that should do well in times of economic uncertainty. But let's focus on the dollar. So up at the 50 here, we get. You know, you can make a case here that what you have here is, you know, an M. So we essentially double top after coming all the way back down, then we double top up here. So when's the last time we do that? March of 20, right? Well, we know what happened in March of 20. Now look where we go. Now we've just double bottomed here. So do you see that? Do you see how the double top is up here at plus 50? Now we've just done a double bottom down here at minus 50. Don't take that lightly, right? This is, I spend time here with you guys for a reason, right? Check here. So what you got to look at that and say, well, okay, let's keep it simple. What happened the last time this happened? What happened to the dollar the last time we got down here? Well, I've got a few lines here, right, to show you that. Say, okay, the last time we got this low to the dollar compared to all these other currencies, well, when was that? When was that? There we are up plus 50 back here, right? It's January 25th of 18. That's how far we have to go back and say, okay, whoa, man, I got to go back over 2 years to see the dollar get that low. Well, how about before that? Here's another one, July of 17. How about before that? Doesn't get down there very often, does it? How far do I have to go back here? I got to go way, 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 way. 11, April of 2011. So just, you know, in like, it's almost like you could ask a child, well, what do you think is going to happen next, Billy? Based on these pretty colored lines that we see, if you were going to take your crayon and you were going to draw where you think that's going to go next, where would you draw that, Billy? Now, I don't mean to be glib or condescending about that, but I'm just trying to say, don't discard this, right? It's saying, oh, that's some bullshit, right? Well, this matters. Now, I'm not saying that as a result of this, the market's going to be up here, but I wouldn't discount the fact that historically, going back, well, almost 10 years, it's 4 times in 10 years that we've gotten this low, right? We've been high many times, right? But this far down relative, look at the spread between the dollar and the euro. Now, if the euro gets up here, and the dollar stays down here, because right now there's nothing says it couldn't go lower at some point. Again, I'm not saying that it must come back, but you, again, just looking at historically, you would say the odds are that if it's going to stay down here, eventually it'll at least start working back towards zero. And you would think if the euro is going to get up here or the pound's going to get up here, eventually they're going to work their way back down. Right? Again, you do the same thing, right? Go look here. When was the last time the euro was up at that height? Right? Doesn't make it all the way back down. Now we're coming back up towards it. It's when you see the loops, right? Those are just, pay attention, right? So we get this far down, pay attention. Oh, let's see. Can I get that? How am I going to get this back? Uh-oh. There we go. Hang on, I gotta click. There we go. All right. So given what we just looked at as to where the dollar is and the fact that I can get a nice, the third's a little sloppy in the beginning. 1, 2, looks like you'd have to go, 3, 4, 5. The 3 is a little ugly, but the ABC into the 4, down we go. Got a clean 5 to finish with a diagonal. Now, I'm not saying buy that, but I'm saying, if you're thinking, let's get through the volatility tomorrow, and then anticipating, well, if there's more down, here, let's do it this way. If there's, here, right, so here, God damn it. It does that to me when come here. There we go. All right, relax. Okay, so we swing 50 to second target. All right, now we're going to go third target. Well, again, right, you just kind of looking here going, okay, where could I be going? Well, here's the algo target off of the 38. So what would be ideal? One more push down, now we start to come back. So which would mean that at that point you'd have the dollar heading back towards zero, right? Dollar strength heading back towards zero, which potentially now, so if you think about it, well, how could that play? Or how could that be consistent with the Elliott count? If we're coming back here, what are we looking for? If this is a 5, we're looking for this, for the B wave, right? Can you see how that would relate here? Now, nothing's guaranteed. It's just, as I tell you guys all the time, all you get is probabilities. Well, based on the historical precedent here of what happens when the dollar gets this low and the Elliott count and how technical this is, if I was going to have any directional bias, it's sure as hell going to be that direction. All right, so maybe it would just play perfectly, come back up to the zero line, but I'm still bearish of the dollar, right? We're going to print, what are we going to print? $10 trillion out of thin air? I'm bearish the dollar, right? I'm bullish Bitcoin, right? So I don't think we have to wonder about my biases there. So how do you trade this? To me, right, I wouldn't go near this the day before that report, right? It's just way, way, way too much risk. There's no reason to do that ever. You say, yeah, but what if I'm on the right side? I see, that's what the rookie says. What if you're on the wrong side? That's what the pro says, right? It's never about how much you could make. It's always primary in your mind. How much could I lose? Right? When you're new, it's like, oh shit, look at all the money I could make. All right, it takes a while to break you of that tendency, right? Because that's what your brain's seeking pleasure, right? Your mind, we've been talking about this a lot lately, your mind will go to extreme lengths to avoid pain, far more so than pleasure, right? Pain is your ultimate motivator, right? So, that's why the tendency is when you get a little bit ahead on a trade, you want to grab that pleasure. But if you're underwater on a trade, this is just pervasive in trading, right? You all know this, right? I know it, you know it, we've all done it, right? You're moving your stop because you don't want the pain. You're trying to avoid the pain of the stop out. Right? So knowing that pain, right, if we're going to use that metaphor, right, pain is part of trading. Again, make sure it's not a death blow. Just take the jab, not the uppercut to the jaw. Pleasure, pain. right, when the trade gets up a little bit, don't give in to that temptation. Assuming the technicals support it, right? Don't be blind to it, but don't give in to that temptation to say, pleasure, I took the profit, and then it does that, and then what do you got now? Now you got serious pain. God, I'm such a dumb fuck. Why would I was doing great on that trade. Why would I get out? Right? That is, to me, right now, I'm doing this a long time, that's much bigger pain than the little pleasure that you got here, right? To watch that run away from me after you set the whole thing up, you went through all this, you're like, God, the trade devil guy showed me all that stuff, and I went through it, and I got this little pop, I got up $200, and I took it, and it went, $3,500, right? So I made my 200. I got that little pleasure. I got that little shot of, oh yeah, give me the shot of pleasure, right? And then it pops up here. That's much more damaging to me, right? You trade long enough, letting that get away from you, much more damaging, right? Psychologically, right? So again, I'm here to try and save you the mistakes that I've made over 25 years. Well, shit, what is it? 28 years now of doing this. Pleasure, pain, careful, right? Your brain, that's what makes trading so hard. You got to do the opposite of what's your natural tendency, what your brain, right, which is always about protecting pleasure and pain, is going to want to grab that pleasure, right? But think about the pain that could be coming. So again, to wrap up here, God, I thought this was going to be a 7 or 8 minute video. Up we go here. If you get the move up because of the volatility tomorrow, it's the retrace you're looking for. Right, it's the retrace. Not trying to pick the turn. Remember this, right? So I preach this in the day trading room all the time. Buyers at lows create new lows. Sellers at highs create new highs. Now, eventually, a buyer gets it, right? The last guy gets it, and he gets the turn, right? But you don't need to. Right? That's a fool's errand. You don't want to be trying to do that. It does. Sure, okay, it'll look great on your Twitter feed. Who fucking cares? Over time. Trying to pick that turn. Here's where you want to make your money. Right here. Right there. Not here and not here. It's right here. Whether we're going up or down, right? Same thing happens, right? It's there. That's the money game, right? You don't have to pick the turn. What do I get here? I get a lower high, lower low, right? This is the money made. That's in FX, absolutely in FX. Right, you got it's the big move, right? And so you look at that and you go, well, that should be fairly simple, right? I got this clear downtrend here. I got swing low, high. I got a lower low, lower high, lower low. Oh, all of a sudden something changed. Whoop! All of a sudden I got a higher low. Whoop! Well, now I got a higher high. Right? So that's what makes trading so challenging, right? It's so simple in theory, right? After the fact, it's so simple, right? When I come here and I show you all these measured moves, you're like, well, fuck, man, why is this so hard for me? It's usually not because you're getting the technicals wrong, right? It's usually all the psychological challenges, or just, some little nuance, right, about knowing how market makers work in FX. Those things you can be taught, but the discipline to take the small stop and hold the winner. That takes years to develop that discipline. So if you're struggling with that and you're within 5 years of your trading career, you're not behind schedule. You're in process. Okay, guys. Whew, I did not mean for that to go so long. All right, I wouldn't touch it. Now you get a reaction tomorrow. Different story. All right, guys. Talk to you later.